Unlocking capital to greener investments will mean going beyond simple commitments to greener production. An environmental and social risk management framework which integrates sustainability into widespread funding and credit products is urgently needed. In this video, Rodrigo Zeidan, Associate Professor of Business and Finance at New York University, Shanghai, discusses the Sona Sustainability Credit Score System, otherwise known as the SSCSS. This is a CSR solution based on sustainability factors, which is used as a criterion to improve financial institutions' lending practices.
In the last segment, I would like to talk about the specifics of the Sona Sustainability Credit Score System, the SSCSS. As I mentioned before, this was a project that was developed a few years ago. The idea behind it was to have account managers from commercial banks filling the questionnaire, filling the necessary information to develop credit ratings for the listed companies, the private companies in their portfolios. Everything would be customizable for the bank. When I start discussing this with Sona, and the idea from Shay and from people at Sona was, we're going to create an open platform. And I like, wow, this is a great idea. Let's have a platform in which everybody that will be interested in creating a credit rating will be able to do it in a way that the system would learn from it, would become more robust over time. Instead of having a methodology that is completely static, we would have a dynamic methodology that would allow the customization of credit ratings to companies in every country in the world. Of course, this entails a number of technical challenges. So we spent a huge amount of time designing the system, improving the system for the new context that we would like to have. But the final product, we believe, may be transformative. And again, this is what economists call network economies, right? In the same way that Google is today a monopoly in the search market, in the same way that we have 2 or 3 companies that dominate the regular credit rating ecosystem. This is the time of standard that is the outcomes are binary. Either this is going to evolve to become this standard, or maybe it's not going to be used that much, and it's going to be very specialized. We hope for the former, of course, not the latter. The system was designed for continuous improvements. And again, and that is also built into the sustainability system, the credit rating system, is that non-financial performance evolves over time. Whereas financial indicators such as ROI or EVA or net income, they are pretty much comparable over time. When we talk about the relative performance of companies and the expectations of society in relation to how companies perform in terms of their social impact, their environmental impact, these expectations change over time. So the system is built to take into account these dynamics, which makes it much more robust. So let me show you how the system works. And again, a lot of technical challenges went into adjusting for different countries, for different industries, things that would be done in-house by commercial banks. Again, a commercial bank doing credit ratings for small companies in a certain country, they don't need to adjust for any of this, right? But we are able to do it, right? So let me show you how the system works. Let me present to you the system, right? Let me That is the, okay, it's here. Here is the system, right? The Sona Sustainability Credit Score system. Here, what we're going to do is we're going to create a rating for a company. Doesn't matter what is the company name. I'm going to call it the company RZ. Doesn't matter. Now, again, the idea behind the system, this is a mostly relational. So this is based on a methodology called analytical hierarchy process. This is the typical, this is a very standard way to develop credit rating systems. And everything's relational. That's how we define, and at the end of the day, ratings are all relational, right? When we talk about a company's having AAA instead of AA+, we're talking about a relation. So we're going to select a country here. So I'm going to select the country since we're going to select the United Kingdom just for this particular reason. Right now, we're going to select a country, we're going to select a company in, let's say, agriculture, and in fishing, given the huge debate on Brexit related to the importance of the fishing industry for the British economy, how the evil Europeans are taking away the rights of fishermen in the UK. Again, none of this matters for this exercise. It's just to give a flavor to what we're doing, right? So we save our choices, and then we go next. Now, how does the system work? And given that I helped design it, I'm going to try to explain so there are no gaps. But again, I'm going to be available for you to ask questions, so it's not a big deal. You can ask any detail you want. There's a user guide, right? That gives you instructions on how to answer this. And again, that is the beauty of the system. We created this so that everybody could answer in a way, and this is the balance that we need to achieve, is that the system must be simple enough so everybody with minimal training can answer, and it must be robust enough so that the numbers, the outcomes are meaningful. There are many trade-offs there, right? So the way we approach this is that there are 6 dimensions: environmental protection, economic growth, social progress, eco-efficiency. The user guide will explain each one of them. For each dimension, there are 5 indicators. And this matters. The first indicator is more important than the second, that is more important than the third, that is more important than the fourth. And of course, right now we don't have a description of the indicator here, but you can click on it and you get a description of what that they mean. For business model, this is part of the user guide. So if you have a question on how to answer this, you can read this. And again, the first rating that you create is maybe not ideal, but especially for analysts that are going to create 10, 20, 30, they're going to be robust. They're going to be very robust. Now, the analysts, these choices, the 6 choices, are the same choices for every indicator. So again, very simple learning curve. You learn how to do one properly. It doesn't take a lot of training. We actually, the first version, the one for the commercial bank that didn't account for industries, different industries, that didn't account for countries, that didn't account for many of these indicators, that was much simpler, had only 4 choices. And it took less than 30 minutes to train an account manager on how to answer that. So there are 6 options, right? And from top to bottom, FSB is future sustainable business. Very few companies should be classified here. These are companies that are the leader in terms of business model related to sustainability in their industry, in their country, right? The other main important one is business as usual. In other words, if this is a typical company in their industry, this is what you select, right? So let's select a typical company here. Let's say that for the greening of supply chains, we have a company that is better than average. It's not the best, but it's better than average. That is what is a company that is looking to build a sustainable business, right? For CO2 and climate emissions, this company is a little bit below the average. Maybe this company is in a particular polluting part of the supply chain of the fishing industry. This company has all the certifications as every other company, but this we don't know about energy consumption. So here we are going to put NA. Okay, we don't have information about it, right? We save this. Next. And we must do that for every single indicator of corporate governance, indicator of innovation, indicator of quality of economic growth. In other words, the analyst must have information about the company, right? That's what it should be. And again, here's our description of the indicators, what they mean, right? It took a long time to create this user manual. It was a fun challenge to do it in a way that is very clear and crisp. Again, let's put a company that is average on everything here, right? And for type of consumers, let's say the type of consumers are a little bit better, right? For social progress, we're going to say that this company is a little bit above everything, and this is not. Eco-efficiency, water management, let's say that this is not relevant, right? So not relevant, if I'm not mistaken, SD or NA would create the same. Waste management, let's say that this company is business as usual for everything. And then in terms of certification, let's say that this company is the best, right? It says here that company is proactive in disseminating best practices, holds almost all certification as industry leader in the subject. We save, we go next. For the second to last, let's keep business as usual. Let's say that this company is better in terms of corruption. Business as usual, but let's say that the company is also better than most here. Right. So there are 30 questions. As you can see, it doesn't take very long to fill up the questionnaire. I'm doing that in less than 5 minutes. Of course, I'm not being careful at all. In terms of labor costs, let's say that this company is above average, is average in labor training, workers' health and risk of accidents is below average, supply chain risks is below average, and you don't have information about or is below average on data disclosure. That's it. We fill up the questionnaire. We fill up the questionnaire, and now we have the results. For this company, this is what we have, that this company would be classified as the final sustainability score is 68%. The final sustainability rating is A-. So we're talking about an upper middle grade. This company would be classified as investment grade. As we can see, we didn't select many areas in which the company was worse than average, right? And of course, this is the main issue with any open platform. It's very easy to create a rating in which the company is going to do very well, but that is fine, because an analyst that creates a rating like that and without any care and takes action based on this is going to lose money, right? So that's an open platform. For a commercial bank, the bank has the incentive to get this right. It has the incentive to get this right, because the idea is that this rating would complement the credit rating for the bank in a way that the bank would modulate the interest rate that they would charge their clients. And the more that they use it, like any credit rating, the better that they get at it, and the more money that they can make over time, because they will be able to discriminate between companies that pose more risks and more opportunities. And that's where this system is different than ESG. As we can see here, we're not talking only about risks. A credit rating that only spits out a number that refers to risks is never going to be used to modulate, to make banks or make financial companies allocate capital better. Financial analysts want to allocate capital to the best performing companies. And this credit rating system is able to discriminate those companies. Why? Because it doesn't only look at companies that are below the average, but also looks at industry leaders. So if you select industry leaders for all of it, if you actually have a company that is much better than average, this company will have a AAA sustainability rating, even if it doesn't have necessarily a AAA regular credit rating. And that was the idea behind this, is that a commercial bank might want to actually allocate its capital better, allocate more capital to this company, because this company has a much better long-term potential. And that's the SSCSS, an open platform in which you can create a sustainability-related credit system, credit rating for any company in your portfolio, any company you would like to analyze. And it really helps if you create it for many companies. This way, you're going to have the sensibility of the system. And again, the idea is that we are also going to upgrade the system over time, because, again, non-financial performance is not static. The criteria change. Companies today are expected to disclose much more data than they were in the past. They are supposed to get much more certifications than they got in the past. So as the standards of the industry go up, business as usual become tougher to achieve. That is the whole point, right? And so this is why this is the first version of the SSCSS. Hopefully we're going to launch a second version, a third version, and so on and so forth. We have all the answers here, as you can see. Look at that. Social progress, One of the reasons that the company got an A- was because we selected SP for all of it. But again, we select many more high ratings than low ratings, and that's why the company got an A-. And again, we are trying to be conservative. We're not trying to punish companies at the moment. Again, this is at the discretion of the analysts at the moment. If we're really very critical, we could make almost impossible for any company to get a AAA rating. But again, nobody's going to use a system in which no company gets a AAA rating. It is useless for allocating capital in real financial markets. And again, those are part of the trade-offs we have been discussing, not only internally, but on events like this, in which questions are much welcome, comments as well. And I hope you not only enjoy the presentation, but are very interested in this very important financial service that hopefully is going to become the standard in the industry. And again, it has been validated. It has been validated scientifically. It was published in the leading business ethics journal in the world. So it passed peer review. Hopefully now it's going to pass the industry review, getting used by analysts all over the world. Again, my name is Rodrigo Zeidan. I am from NYU Shanghai, Fundação Dom Cabral. I work with many companies. You can check my website at rzeidan.com. Let me put my website just a second. So you can reach me out at rz25@nyu.edu. Some articles, these are some recent media appearances on CNN, an article that I wrote from the New York Times, papers on Nature, Harvard Business Review. You can read about all of it, my books, and everything on my website. Again, it was a pleasure talking to you. Thank you, Shay. Thank you, Sona Analytics. It was a pleasure and an honor to talk to you. Bye-bye.